Hey everyone, it's Ben here from the Phantom Trading team. I hope you are all well, healthy, and having a fantastic weekend so far. I just wanted to hop onto the charts for you all this weekend to recap and film some fresh content on two positions that I took on the Australian dollar to the US dollar last week. Now, what is so unique about these trades, which I'm about to break down for you, is that one of them was a long and one of them was a short. So I'm going to be showing you both sides of the market. And both of these trades were executed relatively close to one another. That means I had an area of interest on the chart where I was looking to go long from, providing I saw the correct technicals. And right above that area of interest, I also had an area of interest where I had in mind that I was looking to potentially go short from, providing I had the correct technicals. Now, it's quite important and it's good that I'm sharing this with you to show you the true power of the strategy and how you can capitalize on two different market directions if you're going with the trend or against the trend, basically just at the same time keeping your discretion to an absolute minimum. Now, both of these trades provided great confidences. They were both profitable. They both hit my take profits from where I set them, and it allowed me to extract a combined total of a little over 14% that was added to my account. So great trades. They both ran really well, and I'm very excited to share them with you. Now, the main reason why I wanted to actually film this for you all instead of just sending these into the channel for you all to read is because I feel like it's about time I formally introduce myself, as of course I am the latest addition to join the Phantom team. Now, basically being a coach for you all, this has now enabled me to be in a position where I'm able to share my thought processes on a day-to-day basis behind the decisions I make to benefit all of you and to obviously contribute to the overall infrastructure of what both Brad and Phantom have created. It is an absolute pleasure to be working alongside everybody within this community. The Phantom team are very welcoming, they are great, very knowledgeable, and I feel as if we are all bringing something unique to the table to help you all become extraordinary traders. Having over 600 members, whilst only really being enabled to the public for a little under 2 months, is nothing shy of stupendous. I think we can all agree that we are growing very quickly, and it's great to be involved with such a fast-growing environment. Now, just a bit of an insight about me really before I go ahead and get started. My name is Ben, I'm 22 years old, I live in the UK. I've been trading professionally and full-time since February this year. A lot of you have probably already seen me or spoken to me within the community. It's great if you have. If you haven't, it's a pleasure to meet you. I try to stay as active as I possibly can. I share my insights, general advice, my analysis, etc. like that, and try to lend a helping hand and share some positivity in the community as and when I can. The way that I trade is mainly based on the lower time frames. The lower time frames to me is defined by the hourly one and below. It's very rare that I ever go above that. So in this circumstance, I don't really focus on the hourly 4, the daily, the weekly, or the monthly like some others in the community might do. Just for me, I prefer the lower time frames. Now, I'll only really look at the higher time frames if I have an area of interest in mind, or I just wanted to look at what the higher time frames are actually doing. I am a trader who is very conservative. I like to see concrete, solid evidence and confirmation before taking my positions. Now, obviously, I'm a person who prefers the confirmation entries compared to the risk entries. I'll go into that a little later. To me, the more confidence is, the better. The thing is, I will not be afraid to actually remain disciplined and be picky with a trade if I feel like it doesn't fit my desired criteria. So this means I'm basically setting a great example for everybody in the community because I'm very strict with how I trade. Now, please take into consideration that I do stand by what both Brad and Phantom recommend. It is definitely best to start on the higher time frames if you're just starting out with this strategy or trading in general. It's good to do this to get a feel for the overall dynamics of the strategy before going ahead and jumping into the lower time frames, because I do understand a lot of people, they have a great success by going down to the lower time frames, but they can also contain a lot of noise and a lot of static, and for a beginner it can be very difficult to read the price action you're granted. Obviously, like I said, if you're new to the strategy or to just trading in general, if this is your first community, I do definitely advise to take your time and back test just the higher time frames first, and then when you feel more comfortable, you can go down to the lower time frames and ease your way into it. And I feel like when you do this, and you start out slow and then increase your momentum, you'll be in a much better frame of mind when you do choose to go down to the lower time frames. So if you take something away from this video, I would greatly appreciate some feedback. I'm very open to constructive criticism, so if there's anything that I could improve on, or if you don't understand anything, then please drop me a message. I'm very open and I'm very excited to be doing this for you all, really. Now, I'm going to cut the recording off here and then I'm going to jump back onto the charts to break down the trades for you. So then, jumping straight into the price action, I would like everyone to know first of all that before I even begin plotting order blocks or breaks of structure or looking for any kind of area of interest in general, I will always start on the hourly one time frame, and because I don't go any higher than the hourly one time frame, I always look before I approach any pair to see the direction and the sentiment and bias of where we're actually going. So are we bullish? Are we making higher highs and higher lows? Are we bearish, making lower lows and lower highs? Are we range bound in a consolidation market where we're moving sideways? I like to first of all have a look and see what we're actually doing before I go ahead, scale down and start looking for areas of interest, because it's very important to know where the trend is going. After all, the trend is your friend and it's your safety harness. So if you can trade with it, that is definitely an added bonus for you. Okay, now in this circumstance on AUD USD, we were in a market where we were making lower lows and lower highs. Now I started to look at the price action that the markets were giving me, and I started to realize that yes, okay, we were still breaking structure to the downside, but those breaks of structure decided to get rather corrective, you could say. Now I started to notice that the breaks of the structure were less and less convincing as price was moving down, giving me an indication that we could potentially see a trend reversal, because you can see, just for instance here, that we had a very solid break of this break of structure with this particular candlestick here. Very solid, very impulsive break. Now, if we take our attention over to this break of structure, you can see we started to see quite a lot of wick rejections. We didn't really make an impulsive break, and it wasn't really that convincing that price was going to continue making those lower lows. So I had in the back of my mind that potentially we might be reversing the trend, and it would have allowed me to steer clear of plotting maybe any order blocks here, or potentially taking an entry as price approached that particular region. Now, as you can see, the evidence was actually correct. We did actually break structure to the upside, and as you can see, AUD USD has been on quite the bull run, and we are making high highs and high lows now. Now, I've identified this. I've noticed what price action is doing. I've noticed that this is a fresh uptrend coming from a downtrend, and as we are coming back and pulling back here, we aren't actually breaking any main structure, okay? So to me, main structure is probably somewhere down here, because this is the last pullback for the pull-up. If I can take your attention over to the line chart, you can see they actually had a pullback here before we pulled up. And if you look here, although we did actually pull back and pull up, if you transform that over to candlesticks, it was just one candle. Okay, it wasn't really much of a structure, wasn't really much of a pullback. So to me, to break bearish structure on the hourly one time frame, we would need to obviously break below here. So I have this in the back of my mind before I even begin plotting anything on the charts. Okay, now what I'll do is I'll take you over to the 15-minute time frame where all my technicals actually are, and this is where the most action goes down for me. Okay, so I plot all of my order blocks on the 15-minute and I refine them down to the 5-minute. I plot all of my equal lows, my inefficiency regions, and everything like that on the 15-minute time frame. So as you can see on the hourly one, all I really analyze is the direction, but on the 15-minute, this is where I analyze everything I'm looking to actually trade. Okay, the 15-minute, the 5-minute, and the 1-minute is where I study price action the most. All right, so delving into just talking about the trend and structure a bit more before I begin breaking down the entries here. I wanted to show you that, of course, we were still making higher highs and higher lows on the 15-minute. Now, as you can see, obviously, I have marked in a 15-minute order block and a 5-minute order block down at this particular region. You might be asking yourself, Ben, why have you marked it in down here when we've had multiple other structure breaks to the upside? Now, the reason for this, guys, is I mentioned at the start of the video that I always look for as many confidences as I can get. Now, one key thing that raised my interest with this region here is because we have inefficiency around it. Not only that, but on the way down to tapping into this order block, we also developed a series of equal lows. So I knew that price would have to gravitate back to this region to fill the inefficiency, and an added confluence was that we created equal lows, so the liquidity below these lows would need to be swept, simultaneously tapping into the order block, and then obviously I'd scale down for my confirmation entry and look to get involved. On both of these breaks of structure, they were impulsive breaks. Yes, that's fair enough, but no inefficiency was really left behind, or no real confluence other than that was left behind. So, of course, I've always had this area of interest in the back of my mind, and always just really tried to focus on that if price did come back to it and grant me confirmation, of course. Now, one thing as well you can notice is that on the way back down to tapping into this region here, we started to break structure to the downside, and started to make a series of lower lows and lower highs. Now, I'd like to just clear this myth up quickly that you always need to trade with the trend. Of course, it is very good to trade with the trend, but it's not always necessary to do so. With this strategy, it's very hybrid. It allows you to trade with the trend or against the trend, okay? This is where I always stress to people the importance of having confluences around your areas of interest. And I mentioned to you all as well that I always take confirmation entries. The reason why I do that is so I can have the confirmation and the clarity that I require to be able to take my trade. I rarely take risk entries. I back tested it. It didn't honestly work that well for me as the trader that I actually am. So like I said, I like to see evidence, concrete, solid evidence from positions and areas of interest before I look to obviously get involved. So a key thing for me with these areas of interest, this one as well as this one, we obviously produce equal lows and inefficiency on both, okay? So going down to the 1 minute time frame then, on this particular area of interest, as we approach this region, what you can start to see is as we scale down to the 1 minute time frame, we are looking for breaks of structure, and we're looking for areas where we can look to obviously place an order block, where we can look to obviously place an order on that and look to get involved. So we're making lower lows and lower highs coming down to this region. Fantastic. We had a very impulsive break of this particular low down here. And then obviously the high we needed to break to obviously be able to go bullish and have our confirmation entry was this high right here. And as you can see, we broke that very impulsively, which means the 1 minute has now turned bullish, which means the tone of the market has now changed. So I'm looking to find the candlestick before the break of structure that has the most relevance to it. Now, the candlestick I decided to choose, I've placed my GAN box over it, and I always place my pending order on the equilibrium point. The equilibrium point is the halfway point of the actual order block. I'm just going to move this out of the way quickly so it doesn't clog anything up for you all. So this was a doji candlestick before we had the big surge of momentum that actually broke this high, meaning the 1 minute has just gone bullish. So this was the area of interest I was focusing on, and I placed my order at the halfway point. Now, as you can see, we broke the high, and then we came down, tapped into the halfway point slash equilibrium point pretty much perfectly. If I move the risk to reward out of the way, we tapped into it pretty perfectly, and then obviously that is where the true momentum decided to then kick in. So as you can see, we had all the clarity and confirmation we really needed. We had the break of structure, and we broke the high impulsively, and we had our entry order block, and the order was placed on that particular point there, and we ran for a 1 to 7.5. As you can see, I placed my stop loss as well at 1 pip. This is the absolute bare minimum I can go. I did allow plenty of breathing space for the trade anyway, and my targets are always placed up at prior or lower 50-minute highs or lows. Now, as you can see, I've annotated where my target is. It's actually on the high of the last 15-minute piece of structure we produced, where we pulled up and then pulled back down again. So it's very important to identify your 50-minute and 15-minute highs and lows to know where you're looking to actually take your trade off. And like I said, my way of trading, you could say, is somewhat of a scalping way, and it is you could say that the way of it is that the trade duration is very small. This particular position, if I just scale down to the 5 minute, I can actually show you how long this position actually took to actually hit my target. It took 40 minutes for a 1 to 7.5. So the trade duration is very limited. And again, like I said, I have all the confluences I require to take it. The confirmation entry being the biggest one, the inefficiency that needed to be filled there as well, and the equal lows which developed right above this region. So, aiming for my target with a very minimal stop loss enabled me to extract a 7.5% trade, which was great. Now, I did mention to you all that there was obviously a short trade involved in this breakdown as well, and I'm going to break this down for you too. Now, again, we were in a market where we were breaking structure to the downside, making lower lows and lower highs. Now, yes, that's absolutely fine, because the 15-minute has changed structure a couple of times from being bullish. Now we're going bearish. Now, this is how it allows you to capitalize on both sides of the market. Okay, now one thing I want to draw your attention to is the structure we broke here. Remember, we're on a bull run here, making high highs and high lows. As soon as we broke this structure here, this is a very important structure break. You can see we broke it very impulsively too, left inefficiency behind as well. So this was a very important break of structure to me, and I focus more on the area of interest around this 15-minute order block and this 5-minute order block, compared to focusing maybe like we've had a break of structure here and a little break of structure down here as well, which I haven't marked in. I've focused on that because, again, inefficiency. It's very important that we have some inefficiency around our setups. It's not mandatory, but it's very good if we can get it, because obviously if inefficiency is basically like a void in the market, price will need to navigate back to that region to pick up that lost liquidity to then either continue in that direction or come back a little bit and retract. So a good thing as well is, similar to this setup where we had equal lows, we also had equal highs produced right before we tapped into this area of interest, meaning that both of these setups are very, very high probability. And again, I don't take risk entries. I wouldn't have just got involved on the lower end of this wick with a stop loss above. I would have waited for the confirmation that I require to be able to do so, aiming for the prior 15-minute lows as well. So if I take your attention to the 1 minute, I'd like to show you how I executed this trade as well. Now, the red box is my 5-minute order block and the blue box is my 15-minute order block. You can see we're tapping in, we're starting to show breaks of structure, and if I zoom in, you can quite clearly see that we broke structure very impulsively here, and then this candlestick, individual candlestick here, had some reactions from the downside before we eventually did break it very impulsively. Now, I like to see a bit more of a realistic pullback to class that as my break of structure, but this was still realistic considering we left inefficiency behind on this particular candlestick here, meaning that this has not only broken structure, but it's also left inefficiency behind as well. One thing I was very cautious and vigilant of was the fact that we had equal highs which actually presented themselves right above my order block. I think I mentioned to somebody before in the community that if you're going to take a setup like this, it's very high risk. And you can obviously half your risk or allow a slightly larger stop loss. Now, one thing that really appealed to me was the inefficiency which we created. That to me was all I kind of needed, all the evidence I required to know that the big money was stepping into the market at this level. All I really needed to do was just account for a bit of a larger stop loss, just in case we did come up and sweep above these highs. Now, thankfully we didn't. Obviously we broke the structure. It allowed me to place my order block on this candlestick here, the candlestick before we eventually did break structure. Left inefficiency. I placed my pending order on the halfway point. We got tagged into the position, and then we ran rather flawlessly down to the prior 15-minute low. As you can see here as well, we ran rather well down to this region. So as you can see, within relatively a couple of hours worth of price action, we were able to extract a very high probability long position and a very high probability short position at the same time. Now, if I just scale to the 5-minute, I'll show you the trade duration of how long this actually took to hit take profit. This actually took 1 hour and 10 minutes, and both trades were in the London session, by the way, I should like to add. So lots of liquidity would have been placed around the London session, which means that these had plenty of movement to obviously go to where they needed to go. That's about it for all I wanted to mention. Like I mentioned, this was a very high probability couple of trades. Now, this is why I wanted to break them down for you all. If anything I've mentioned hasn't made sense to you the first time you've watched this video, do go back again and again and again and watch it and keep reflecting and using it for reference for your own setups to see how you can actually view the price action, how I viewed it, and view the technicals, how I've viewed them as well. Practice is perfect, guys. I would like to just mention, keep on top of the back testing, keep on top of your ASR. It's very important that you keep reflecting yourself as a trader and how you obviously resonate with this strategy. Any questions on anything, my DMs are always open to anybody. I'm always there to lend a helping hand. And like I said, stay frosty and obviously back test and see how you go with the strategy. Take care, guys.